GM, good morning. Welcome to the Milk Road Show, the daily crypto show where the only constant is nothing's constant. I'm your host, Jay Hamilton. It's Tuesday, August the 19th, and you guys know how much I love to talk about the future of finance and the real use cases for crypto, not just speculation, which we all know it's a roller coaster and everyone loves to gamble, but the stuff that is going to be the fabric of our lives in the coming decades. And everyone knows about stablecoins, product market fit, they're flying, they're super exciting. One of the big use cases that I think is going to be a narrative of the coming years is tokenized stocks. I'm so excited about tokenized stocks. It is such an obvious use case, and it is a massive opportunity. Global equities are over $120 trillion worldwide. So when you think about them all being brought on chain, obviously you think, wow, that's a massive thing that could really show the scale of blockchain that we all have imagined for years. Imagine NASDAQ on chain is a statement that we've all thought about. And this really picked up steam recently. In June, we had Robinhood and Kraken and Gemini and Bybit all make announcements that they were going to start offering tokenized stock to non-US investors. And now we have Ondo joining the party as well. So today we are joined by Ian De Bode, the Chief Strategy Officer at Ondo Finance, one of the leading protocols that's focused on bringing RWAs like US Treasuries and money market funds and now stocks on chain. Before we jump in and hear from Ian, I got to remind you guys, if you're making swaps, you got to check out Milk Road Swap, not only because it's our product and I've got to endorse our own product, but more so because it's got some of the lowest fees in the space. You can trade on Ethereum and Arbitrum and Base and Solana all in one place, and the fees are only 0.15%. I challenge you to try to find lower fees anywhere else. Today's episode is brought to you by Figure Markets. Grow your cash like a bank, no lockups, just real returns. It's also brought to you by Nexo, the platform that grows your crypto without locking it away. With that, Ian, welcome to the Milk Road Show.
Hello, Jay. Thanks for having me.
Pleasure to have you. Absolute pleasure. Really excited to jump into this conversation with you. Let's start high level. Global equities are, my estimate is 100 trillion global equities. It's a difficult market, give or take. About maybe the better number to look at is American global equity, or American equities is about 65 trillion. Will they all be tokenized one day? Is that where this is headed?
I don't know about all of them. Maybe depends on your time horizon. I do think in the immediate future, the tokenization of equities, particularly outside of the US, is happening kind of as we speak. You alluded to, tokenized equities having had a very big month in June and July. It's very clear that people have looked at stablecoins with a product market fit and said, interesting, if tokenized cash can do this for the position of the dollar globally, can I now tokenize U.S. capital markets and do something similar for the dominance of U.S. capital markets globally? And so we're fundamental believers in that, tokenization of equities is about to take off. This will take time, right? Particularly in the numbers that you're talking about, the 60, 70 trillion in U.S. equities, global equities at 120 trillion. That's not going to come all of it on chain next year. But we do fundamentally believe that we are at a point where these products can be made available via crypto rails in a much better way to a global audience. And over time, the adoption of those tokenized stocks and equities, we do believe, is going to take off. And we've already seen it play out with tokenized treasuries in a way. I think when I joined Ondo about 18 months ago, the category as a whole of tokenized treasuries was at $1 billion or something. Now we're looking at $7 billion. So that is meaningful growth. It's still significantly smaller than stablecoins, which are at $250 billion and growing, right? But it's very clear that you see stablecoins, tokenized treasuries, and now stocks and ETFs. So we are very excited to bring all these assets on chain, truly to facilitate global access into US capital markets, which have been a marvel for wealth creation globally for decades now.
Okay, so I want to jump into what's happened so far with tokenized stocks, because there's been some issues and it hasn't maybe necessarily been the smoothest start with all the providers and the way they're providing it. I'm going to tease everybody there for just a second. But before we talk about that, I just want to make sure that everybody understands why we need tokenized equities. Because I think a lot of people listening to this are thinking, well, like, what do I got great access to equity products. Like, I don't need tokenized equities. I'll just go on Robinhood and I'll buy all the equities I want. So let's just cover that first about why we need them. And then we'll jump into what's happened so far.
Yeah, I love that question because it's the number one question I get. Like, why do I need tokenized equities? Or like when people think of tokenization, they still think a lot about real estate, private equity, private credit, a lot of the more private asset classes that are often illiquid. Because I think, for the past decade or so, tokenization has been heralded as this way to, put illiquid assets on chain, and then magically the illiquidity premium goes down because people want to buy this stuff globally. And that has just not played out, in part because fundamentally these assets are illiquid for a reason. It often has to do with the fact that it's very hard to price these assets. How are you going to price a building? How are you going to price a PE fund? Sometimes it's also not easy, or the incentives in the overall market may not be aligned to actually put these things on chain and trade them. Like a PE GP does not really want their fund to trade on chain and be priced all the time. So there's been a lot of talk about tokenization. I think historically people would look at that and say, I'm not sure it's lived up to the hype, with the exception of stablecoins and treasuries now. But that is in part because people have focused on these illiquid assets. I hope someone figures it out at some point, but we as Ondo really focus on assets that are already very liquid in public markets, because the reason why you tokenize something in the first place is you want to provide access to those assets, and you want to enable their use as collateral on chain. For both of those use cases, equities are actually pretty great because you've got super deep and liquid markets in a TradFi world, which gives these things incredible pricing transparency, which makes them very good for collateral on chain. And very clearly, globally, a lot of people want access to these things, just like people wanted access to dollars, and that's what a stablecoin did. So why are we tokenizing equities? It is for that access use case for a global audience.
Can I just ask you quickly on the access part, any predictions there or thoughts there? Like, it's always nice to have a stat or to understand the scale of that. Like, how many people don't have, to me, the obvious thing is, if I'm not an American and I don't have access to the American equities, I probably want access to that. Best market in the world, clearly shown that for decades. Okay, great. Like, I would love to buy, QQQ or Apple or SPY, like, definitely. So, but how big is that? How many people don't have access to that and might be wanting that access?
I think it's actually very significant.
Yeah.
People don't really appreciate how large that market is. I think when I saw some stats that globally there are about 400 to 500 million people with a brokerage account. The vast majority of those are in the US. There are about 500 to 600 million crypto exchange accounts and Web3 wallets out there, often with people who do not have a brokerage account. So if you can tokenize stocks and make them available on crypto rails and get a lot of the crypto exchanges to list these assets, I think the scale of access that you're talking about is very, very meaningful. Now, how many of those are truly looking to buy US stocks, ETFs? You mentioned, SPY, QQQ, and the like. I think it's going to take a little bit of time to educate users on what these assets are, what are they buying, what is the return profile, and the like. But I have no doubt that the scale of access globally of people who want access but historically have not had it is very, very significant. Like most jurisdictions, you got to have a minimum balance of 5, 10K in order to even open an account. Good luck. And then when you try to buy these things via your equivalent of a brokerage account in the domestic market, you get 4 to 5% FX fees, 4 to 5% trading fees. Those are extreme examples, but there are markets where legitimately you lose 10% of your capital the moment you want to enter into a trade. And that is just not a good mousetrap. right? So tokenize these equities, put them on crypto rails, get anyone with a stable coin to buy these things is going to be a meaningful innovation and helpful for a global audience to get access to US capital markets.
Okay. Thank you so much for breaking that down, Ian. That makes so much sense. Let's jump into what's happened so far. So
Jay, I do, if you would allow me, because you did mention there's a lot of people in the US that look at that and say, meh, I already have my Fidelity account or Robinhood account and the like, which is true. But even for those, I think people underestimate how much better a tokenized stock can be. Because yes, you have your brokerage account and yes, you can have access, but not all brokerage accounts are created equally. Like some brokerage accounts now I can trade 24/5 and others I can't. In some brokerage accounts, I can take out margin, but I can only use it to invest more on the exact platform. I can't take margin off the brokerage account. And the rate I get, I can't shop it around because I'm locked into this particular brokerage account. Once you tokenize these things, it's kind of very similar to a stablecoin. You're going to be able to move your capital between your various accounts seamlessly, between your different wallets seamlessly, and you're going to be able to shop around any type of margin rate that you want in DeFi or someplace else. So the mobility that you can get on your assets once you've tokenized them is incredibly significant. It's kind of what, stablecoin and the incremental benefit relative to a bank account. Most people who own a stablecoin would probably consider it as a better way of money than just a bank deposit because they can move it around 24/7, because they can send it globally whenever they want, and because they can use it in DeFi. The same benefits hold for tokenizing stocks and ETFs, although in the case of a bank account, at least I could move my cash between various bank accounts pretty seamlessly. But with a brokerage account, you can, but it's very difficult. It takes very long. So the incremental benefit of going from a brokerage account in TradFi rails to tokenized stocks, I would say is even larger than when we went from a bank account to a stablecoin.
That is a very good point. It makes me think about I didn't realize that with stablecoins until I really started using them though, right? So right. Even though I knew it, and when we first started talking about stablecoins, everybody was like, yeah, of course, that makes sense in theory. I feel like that we need that. It kind of goes back to what you said before. It's going to take time. Like we need people to use it and experience it. And once you feel that, then you're like, oh my God, I'll never go back to my brokerage.
100%.
Right?
Because right now, if you ask me, it's like, oh, your brokerage account, are you happy with it? I'd be like, probably, but it's because I've never experienced the alternative.
Anything else,
right?
Yeah.
The moment I can start moving my stocks 24/7, if that becomes the norm, I will not be very happy with the current brokerage account I have.
Yeah, very, very good point. Okay, what has happened so far? Because I'm going to bring up an article from the Wall Street Journal, which highlighted that. And let's be honest, it's not all sunshine and rainbows when you're starting a new tool, right? And launching a new system, and you're dealing with regulators and all of that. And you mentioned the challenges before around liquidity, but so what has happened so far? This Wall Street Journal article is titled, for everybody that's listening and can't see the screen, says, want to trade Amazon on crypto, on a crypto exchange, the price might be off by 300%. So what we've seen so far is exactly this, that there's been some of these tokenized stocks that are not tracking properly the actual price. What's going on? Why is this happening? And then we'll jump into how we make sure this isn't an issue, because I want to make sure that everybody doesn't read just the Wall Street Journal and think that crypto is bad and a scam, because these clickbait titles, they don't do well for us.
Clickbait titles. I'm sure the Wall Street Journal would love that description. No, but I agree. There's a right way to tokenize, and then there's a not great way to tokenize. Tokenization in and of itself is very easy to do, right? You just take an asset, you immobilize it into a custody account, you place a token on chain, and ta-da, right? You've tokenized something. The hard part is making sure that there's always sufficient liquidity to redeem that token against the underlying or the cash equivalent, and to make sure that that token you've issued always tracks the price of the underlying, to make sure that whenever people buy the token, it's as good as the underlying. The current versions that have been launched, because there have been previous attempts at tokenizing stocks. Xstocks is the latest attempt that I think that Wall Street Journal article was referring to. But that issuer of that product, Backed, has been around for longer, right? And they issued stocks on Ethereum as well. The problem with these existing models, though, is that, as this Wall Street Journal article highlighted, they tend to not always track the price of the underlying. And the reason for that is because there is no easy bridge in the liquidity between TradFi and onchain. For stocks, all the prices are set in the TradFi venues, right? The NASDAQ, New York Stock Exchange. That is where price discovery happens, and that is where all the liquidity of these assets is. That is where everyone globally, more or less, now buys their stocks. You can place these assets on chain, but if you do that, you want to make sure that there is always a very easy way to mint and burn these assets on chain at the same levels of liquidity and price as is available off chain in the NASDAQ and New York Stock Exchange. If there is no easy connectivity of the liquidity between these two avenues, what ends up happening is these stocks that have been issued on chain and that do not have great connectivity to these TradFi rails, these prices can start to diverge. And because there's no connectivity, you cannot arbitrage these prices down to where they should be on the other, TradFi rails. And that is what you've seen in these other venues. There is no easy way to mint and burn these tokens just in time at the price that is relevant on the TradFi venues. And as a result, these on-chain stocks that really rely on on-chain liquidity with these on-chain DEX pools and the like, the prices here can start to diverge, but it's not easy to bring them down or bring them back up because that bridge of liquidity does not exist. And as a result, people are buying these stocks on chain left and right at depegged prices, essentially, relative to the underlying. You saw it with stablecoins, particularly in the beginning too. A stablecoin can depeg. People do not want to buy $1 at $1.05, right? Because the moment you do that, you're immediately losing money. And the reason why that ended up happening is for some stable coins, there wasn't an easy way to essentially put $1 in a bank account, get the stable coin instantly, and then arb it down to the right price. And the same thing you're seeing now with these first iteration of stocks. You need a way to very easily mint and burn these on-chain assets, bring the prices down, and connect the TradFi liquidity to the on-chain liquidity. If you don't do that, these things depeg.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Okay, great lead into Ondo and how you guys are ensuring that liquidity is there. Maybe we'd start with liquidity, but I want to zoom out further into the full Ondo product that you guys have launched and what this looks like, so you can explain that. And I'm going to talk about some of my favorite parts of it too.
Very good. So we are about to launch the Ondo Global Markets Platform, which is our version of these tokenized stocks. It really is the next iteration of the assets that we've tokenized already with treasuries, right? When you look at the journey of Ondo, we really started with tokenizing treasuries first, and now we're moving into stocks. The reason why it was helpful for us to start with these tokenized treasuries is because we figured out all of these liquidity issues and how to set up the right rails and how you can actually do tokenization in the right way. The current TVL in our products is about $1.4 billion. We're the second largest right after BlackRock. So we have been in the market for quite some time. We know what it takes to tokenize these assets. And even most importantly, we know how to connect TradFi liquidity to on-chain liquidity and to have sufficient liquidity for redemptions. So the way that we have now built our platform that we will launch very soon is that when you want to essentially acquire a stock on-chain, our model does not rely on on-chain liquidity to make that happen. When we do not rely on these on-chain DEX pools like some of the other providers, the way that we have set up our platform is if a primary purchaser wants to acquire, let's say, $1 million worth of Tesla, the way it works is that we can instantly mint $1 million worth of Tesla at the exact same price as is available on the New York Stock Exchange and the NASDAQ on chain the moment you send us stablecoins. So there is instant connectivity into these TradFi liquidity venues to make sure that people can always mint and burn these assets at the same price as is available in TradFi. As a result, even when people deploy liquidity pools on chain, people are going to be able to arb down these prices. But even more importantly, you do not have to rely on those on-chain liquidity pools, those on-chain DEX pools, in order to actually get the stocks and ETFs. Because the other bit we haven't really talked about is it's very, very capital prohibitive and expensive to deploy all of these DEX pools in stocks. I mean, you can do it on 10 stocks, maybe 20 stocks. But the moment you want to do it to 1,000 stocks, who's going to put up all that capital to trade in and out of? Yeah, the balance sheet requirements are rather absurd. And even more importantly, why would you? Because all the liquidity to trade these things is available in the TradFi anyway. So the way to think of our platform that we just built is essentially an instant bridge from a public blockchain into TradFi liquidity back and forth.
Okay. And tell us because you've solved liquidity. Fantastic. I love the ticker names that you guys have gone with. Shout out to whoever, I don't know if that was you who came up with these tickers, but basically it's the equivalent equity ticker. So for Apple, it's AAPL, and then just an ON at the end, which for Ondo, but also makes me think on chain. So
there you go.
Mastery, absolute mastery job. So which is very nice to be able to. When I think about where this goes in 10 years, okay, I can just look at the ticker and see that it's SPYON. Okay, I know it's an on-chain version of SPY. Amazing. The other thing that really stood out to me was that you get full rights, because a lot of the tokenized stocks so far do not include dividends or full rights that you would get if you were to go buy the stock through a public market. So talk to us a little bit about how you shape that and how dividends work. I think is an important thing to understand as well.
Yeah, no, I love the question, because this is another thing that has caused a lot of debate in the industry recently. Of like, when you buy a tokenized stock on chain, what do you really get? What are you really buying? And there's been even some backlash against what they call wrapper models, where the stock you hold on chain isn't the same thing as the exact stock. So in our model, that is the case. We essentially issue wrapper tokens. When you buy a tokenized stock on chain, what ends up happening is we go and acquire that same stock in the NASDAQ, New York Stock Exchange, the traditional venues, and we put that into a clearing broker account. It is immobilized. Whenever you have your token on chain, you can always redeem it against the cash value of the underlying. We also, any dividend that the underlying stock receives, we will automatically reinvest into more shares so that over time, the token that you hold is the exact same economic exposure as if you were holding the underlying and reinvesting the dividends. We have a structure where the token that you hold is essentially a debt product. That means that the SPV that is issued said token only holds the underlying, and they issue debt against that underlying that you end up holding as a token holder. If anything ever happens to the issuer, if we fail to meet a redemption, or if a collateral buffer falls below a certain amount, we have an agreement with a third party that will seize all of our underlying, sell it for cash, and repay all of the debt holders, which is the token holders. So this is a fully bankruptcy remote design with all the bells and whistles in terms of investor protection that are possible. We will post daily attestations of the reserves that we hold. We will hold a very large collateral buffer on top of the reserves to make sure that everyone always has full comfort that these things are fully backed, plus a little bit extra. So we fundamentally believe that even though these tokens are not actually the same thing as the underlying stock, it's about as good as it gets. It is very similar in a way, although better than how a stablecoin tokenized cash, because the stablecoin also is kind of a wrapper token on top of the cash. It's not the same thing as the underlying dollar, but you can always redeem it for the underlying. And in fact, our tokens have better bankruptcy remote protections than the stablecoin. So we pride ourselves in always backing our assets one for one, fully bankruptcy remote, with a large collateral buffer, reinvestment of the dividends, and the like. Some of the other models that are out there right now, when you look at the fine print, some of them have no obligation to actually back the underlying one for one. And for those issuers that do have an obligation to back it one for one, almost none of them have a meaningful collateral buffer on top that gives people a little bit of extra assurance.
Okay, fantastic. What about privacy? Because one of the big things that is a conversation that is really coming up recently as we move. These are the moments where I notice that we're in this massive shift from crypto degen, crypto natives, decentralization maxis, like the original creators of crypto, into the institutions being here, because we never really talked about privacy as much as we have in the last 6 months. Why? Well, because most of the institutions, most large capital holders, they don't want to move money in a way that everybody knows that they're moving money. And when you buy stocks, it's not like everybody knows your portfolio and what you bought, right? But in crypto, a lot of stuff is public currently, right? How is privacy handled?
Well, so our tokens are issued or will be issued on multiple different blockchains. We're going live on Ethereum mainnet. We'll go live on other chains pretty soon. The privacy restrictions and implementations that we can put on these tokens obviously depend on the network that they're on. Right. On Ethereum, to your point, people do not really have an expectation of full privacy. It's kind of synonymous accounts, and that's going to be the same case for our tokens. The moment crypto exchanges list these assets, then that obviously obfuscates a little bit more of the type of privacy that people can have. There are obviously also other chains that are really making privacy a full-on implementation for how the network operates, and we will continue to expand our assets to more chains that support full privacy. But it's always a little bit of a trade-off. You mentioned the institutions that really care about privacy. I would agree with that sentiment. Most institutions right now, I would say the large ones in particular, the TradFi rails have served them well. We actually don't think that in the first instance, when this product is rolled out, that institutions, at least the traditional ones, are going to be the main entities that are holding these assets. We think it'll be a retail audience that has figured out that a stablecoin is a good way to get access to the US dollar and now wants exposure to US capital markets. And for these people, it's a little bit of a trade-off, right? Yes, you may not get all the full privacy that you would like, but at least you get access to these assets. And on, networks like Ethereum, Solana, and the like, that's good enough.
Mm-hmm. Mm-hmm. Yeah, it's a great point. Fully agree. I mean, I'd rather buy Bitcoin than not be able to buy Bitcoin in the end. Or I'd rather be able to take advantage of AI than not be able to take advantage of AI, right? And obviously, 100%. One of the best ways to take advantage of AI, unless you're able to invest privately, is to go buy some of the Mag 7 right now, right? Like that's just there's your shot. So, okay, how big let's talk about adoption. How big is tokenized equities right now? If I look at rwa.xyz, which is a site that I often refer to, great site to look at stats around tokenization of real world assets, it's saying that we're at about 350 million right now in tokenized stocks. I don't know if where you would land on that, if you can verify that, or if that's in the range. But it feels small, regardless, it's small right now.
Yeah.
Play this out for us. Yeah. What is adoption going to look like?
Yes. Tokenized stocks right now is small. I love the 360 million number. I would probably argue it's even smaller. I think the vast value on that page is Exodus. which is the dual listing.
It's true. It is.
And so the vast majority of that value,
245 million of it.
That's just value that is really on the NASDAQ and the like, quite frankly. I think when you look at true tokenized stocks, the way we typically think about tokenized stocks is about 100 mil. It's not a lot at all. But I think in part it's because the way that people have done it so far is just not very good. We talked a lot about the liquidity issues, the depegging issues, and the like. I think so far people have looked at tokenized stocks with a little bit of suspicion and saying, is this really what I want to be buying? So I'm not surprised that the number right now is small. Once an issuer comes on chain with a real platform that can service all of these global users with the liquidity that they're looking for, and with sufficient guarantees that the price is actually the price of the underlying and the like, I do expect, more meaningful growth. How big is that growth really going to be? That is a little bit TBD. But again, as previously mentioned, there's about 500 to 600 million crypto brokerage accounts out there right now. Most of these people have no access to stocks whatsoever. So once people figure out that tokenized stocks are legitimate, I do expect that number to grow pretty meaningfully. But you'll see it, I think, evolve just like we've seen other tokenized assets evolve, where in the beginning there's a little bit of small growth, and at some point you get a hockey stick moment, right? When is that hockey stick moment really going to occur? I don't know. But I would be surprised if we do not get to at least a couple of $100 million by the end of this year. Okay.
So it's gradually and then all of a sudden, right?
That's typically how it works with all these assets.
It's how it works for everything that achieves any sort of adoption. And this feels inevitable. The thing that stands out to me is, if the US stock market is 64 trillion roughly in total value, even if tokenized equity could get 1% of that would be huge. Massive, right? That's huge. Massive. Like you don't need to capture very much of that to make a big impact here. Any thoughts on, you mentioned previously that right now you're launching on Ethereum, soon to launch on Solana, BNB, and I think other chains as well in the future. Any thoughts on where this will exist long term? Will there be a dominant chain?
Yeah, it's a great question, because I feel like a lot of the chains like to fight over which chain's perfect for equities and RWAs. Yeah. I mean, we are building our own chain, the Ondo chain, to really be also foundational infrastructure to make the issuance and distribution of these assets, even to other chains, a lot more seamless. Because we haven't really talked about some of the difficulties that exist in issuing these tokens on the current public blockchains that exist. Some of the block times are problematic. Some of the front-running dynamics are pretty problematic. There's a wide range of issues, I think, for every single blockchain, quite frankly, out there on how you issue these tokens and the like. The DeFi ecosystems on the various chains, I think, will have to maybe even change pretty dramatically, or a new DeFi ecosystem is going to have to evolve to really support tokenized stocks at scale. I mean, there's 1,000 assets, even more, that trade 24/5 on Robinhood. Like using a brokerage portfolio with 1,000 different tickers in it in DeFi right now in a gas efficient way. I don't know who's going to crack that. But it is very abundantly clear that the current blockchains have a lot of users, have existing DeFi ecosystems. And that is why we, as Ondo Finance, as an asset issuer, we like to go where the users are. And that is why we are starting on, mainnet Ethereum first, expanding to other chains pretty soon. We go where the users are because we fundamentally believe the initial mousetrap of Ondo Global Markets is to provide access to that global user base that right now has figured out how to be on chain, but does not have access to US capital markets just yet. But as we start thinking about the broader utility for these assets, the ecosystem around it, I'm not sure which public chain, quite frankly, really is going to win. It probably will be a couple. And we at Ondo are also building out the Ondo chain to solve a lot of the needs and build out that ecosystem in a very targeted way to really do DeFi on stocks, ETFs, and the like in the right way.
And you're not Robinhood we've been talking about this playbook all week because Stripe and Circle just announced they're building L1s as well. And so we're talking about, how is the future of finance going to come on chain? Specifically, how does TradFi and banks come on chain? And we talked in yesterday's episode about Canton Network and how a lot of the banks are building private chains through there. So let's not necessarily talk about which chain is going to be used because that is a difficult thing to predict. Let's talk more about fast forward 5 years, 10 years down the road. What are the downstream effects when we have a lot of capital in tokenized equities? Let's make that assumption. We're going to achieve adoption. It's going to happen in some way, not exactly sure how. What are the downstream effects of that, and what is the ecosystem going to look like in the future?
Yes, this is the part that gets me quite excited because people don't sufficiently appreciate how bad the TradFi rails are, I think. The moment you have all of these individual tokenized stocks and ETFs that are on multiple blockchains, a blockchain really is a permissionless layer to do cool innovation on, right? And so how you think about how the equivalent of an ETF or a specific type of strategy is created, how AI agents can engage with finance and start putting together investment strategies, all of that stuff is going to get completely blown out of the water because historically, these assets only lived on pretty bad TradFi rails. And I'm exaggerating a little bit, like the NASDAQ's tech stack is incredible, right? Those rails are not bad. But the way settlement happens, the way value moves, that's pretty archaic. So once all of these assets move to a layer where the movement of value can happen 24/7 and where the execution of strategies can happen 24/7 and where everything is composable, I personally get quite excited on the level of innovation that is able to bring to wealth management, asset management, brokerage more broadly. And what that exactly looks like, quite frankly, I don't know, but I don't think anyone does. It's kind of the innovation that you're going to see in payments because of stablecoins. I think you're going to see in brokerage, wealth, and asset management because of tokenized stocks. And what that exactly looks like, again, I don't know, but it's going to be a lot. And I don't think a lot of people are ready for it. The other thing I think we'll see too is TradFi is going to have to figure out a way to bridge into 24/7 systems a lot more than they currently have. Because
let's talk about that, because when you launch, you're 24/5. You're not 24/7, right?
Correct. Yes.
Why?
In part, it's because literally stocks do not trade in any meaningful way over the weekend. So even if someone on chain wanted to get the stock from us, we can't go into the NASDAQ and New York Stock Exchange and turn around and buy these things. There are other avenues through which you can figure out ways to move towards 24/7. So we are working on that, but it is not an easy thing to do. But I do think crypto blockchains more broadly, companies like Ondo, are going to lead the way to figure out 24/7 markets. Because the blockchain rails are uniquely suited to it. And, there'll be a couple of forward-leading TradFi companies that help us with that. And we're working on those, right partnerships right now. But fundamentally, a crypto audience, crypto investors, they expect 24/7 exposure, right? It would be completely absurd, even a year from now, when something happens in the global scene that is meaningfully impactful for equity markets. It happens to happen over a Sunday or a Saturday or whatever. The crypto market moves, but equities don't, right? Right now, you can kind of get away with it because these equities are not on chain. But the moment they move on chain in any meaningful way, people are going to figure out a way to trade them. So TradFi is very aware of that, at least the forward-leading entities. Everyone is focusing increasingly on 24/7 markets. And I do believe that the infrastructure to make that happen is going to be developed on chain first.
Okay, final question before we let you go, Ian. Our audience is an investor audience, always looking to understand where the opportunities are. we talked a little bit. I want to just touch on who the players are that are building out the ecosystem and infrastructure for tokenized stocks. So we talked a little bit about the chains that you're building on, Ethereum, Solana, and BNB. Who are the other players, whether they be crypto native companies or TradFi companies? Who are the other active players that are building infrastructure to operate tokenized stocks?
Yeah, you mentioned a couple of players already. I feel like every week someone new pops up, right? We've been talking about tokenization of equities since last year, February 2024, and at the time, no one cared, right? Even earlier this year in February, we did the Ondo Summit. We were talking about tokenized stocks, and people were still like, "Why?" So I'm very happy to see there's this like land grab moment. Robinhood is obviously doing quite a bit. Their implementation is very different to ours, but if Robinhood, gets involved, I'm sure. I mean, it means something for the space. We get a lot of questions about it. You have the Xstocks Kraken, partnership that obviously has made a lot of waves, particularly in the Solana ecosystem. And then there's others that focus a little bit more on, the native issuance of some of these stocks. You've got, our friends at Superstate doing very interesting things. I believe Figure Markets maybe even working on something. So it's the usual names that are all moving towards, the getting capital markets on chain, and typically equities becomes a part of that. We do believe, and this is, I guess, my plug for Ondo Finance, but I think we are the only ones that have the track record to actually pull this off. There's no one else out there that has issued, 1.4 billion in these tokenized treasuries, figured out to do it on 10 different chains, integrated into 100 different DeFi protocols, have figured out the liquidity back into TradFi with the right TradFi partnerships in order to build these integrations and bridge the liquidity. I think that really is the hard part. So we feel pretty good about our positioning, but no doubt, like over the next 12 months, I wouldn't be surprised if you'll see announcements from the Interactive Brokers of the world, and the Charles Schwabs of the world, and the Fidelities of the world. Like, it's definitely starting to happen.
And what's interesting about that is those are the announcements that we sort of need to get the media attention to educate everybody that this is happening and why this exists.
Totally.
And so everybody in media, please help us push this, because it is a big narrative that is coming. And it is funny to think how fast time happens in crypto. Like you said, 6 months ago, we weren't even really talking about this. It's wild. Ian, really absolute pleasure to get you on the show today. Thank you so much for joining us.
Thanks so much for having me, Jay. It's been a pleasure.
Thanks for listening in, everybody. I've got to remind you, as always, that none of today's episode is financial advice. I'm not your financial advisor. Ian is not your financial advisor. If you are doing investing, you should speak to a professional. And if you're doing any swaps with your crypto, you should check out Milk Road Swap at swap.milkroad.com. Some of the lowest fees in the space. Thanks for listening in, y'all. Have yourselves a wicked awesome day. We'll see you back again tomorrow. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.